All right, for today's webinar, PSR will be presenting on two topics. For me personally, it will be a FOMC meeting. Lindsay will be covering a trading buy note on Shopper 360. Today, we also have our special guest from our colleague from Phillip Futures, Samuel, which will be covering the Trump-Kim summit. So let us begin today's webinar. So on my topic here, the most important thing to note here is actually we will be most probably experiencing another additional rate hike this year. To put into more details, the FOMC ended their meeting on the 13th of June 2018. That was last Wednesday. So they obviously, as expected by the markets, they actually raised their benchmark interest rate by 25 basis points to between the range of 1.75% to 2% for their Fed fund rate. And the most important thing to note is on their dot plot, which they publish it on during every meeting, is that it suggested that there will be additional rate hikes this year based on the medium target rates that they have set. So if you could see at the bottom left-hand chart at the end of 2018, so right there, we saw a dot that moves up from the 2.25 to 2. From the 2 to 2.25 range to the 2 to 2.5 to the 2.25 to 2.5 range. So that would actually bring the medium target rates up and suggesting us that we will have another additional rate hikes this year, bringing the total rate hikes this year to 4. As of the statements, the labor market condition continue to strengthen. Job gains remain strong. The economical activity has also rising at a solid rate. Unemployment has also fallen. So if you look at the top right-hand chart, unemployment is now at a low of 3.8. That's quite, if I'm not wrong, the all-time low. However, we also note that the labor force participation rate has also fallen to a low of 62.7. So other than that, investment is picking up, spending is picking up, and continues to grow strongly. And another or an important thing to note is that by the end of this year, starting next year, the Fed chairman, Jerome Powell, will have actually implemented a press conference after the end of every meeting. So now we're having one every other meeting. So he's intending to have it in every meeting, and that actually signals to us that there might be potential that of more rate hikes to come as and when needed, because they usually only raise their interest rate during a press conference meeting. So with that, I'll pass the next topic to Lindsay on Shopper 360.
Thank you, Saiting. Hi, everyone. So we have recently published a trading buy note on Shopper 360. So just to bring you guys through why we are so upbeat about this particular counter. So what does Shopper 360 do? So basically, it's a shopper marketing services provider in Malaysia. So it has 30 years of experience in the in-store advertising industry. So I believe that in everyone's mind, what exactly is a shopper marketing services provider, or what exactly is an in-store advertising industry? So with that, I've actually attached two pictures to illustrate on what they basically do. So what you see, or a typical view of a hypermarket or supermarket. Basically, they cover this type of promotions or shelves, additional shelves for advertisement or for promotional activities. They also provide, so this is considered as an in-store advertising. You also see all these labels where they label it as promotional items. These are the things that Shopper 360 will do. Even for marketing materials like this particular shelf here, these are the things they provide as well. In addition, they also provide field force management. So what does field force management means? It means that they will have to ensure that the shelves is filled up promptly. They have to make sure that the stocks in the store is sufficient. So these are, as you can see, that there's difference in these two types of services. One is more value adding, where they will provide creative ideas on how to promote a certain products, while the other one will be less value adding, where they will just have to maintain the inventory on shelf. And next, if you look at these pictures here, this picture here shows you the Vitagen event, which was launched last year. So what basically is that Shopper 360 would take on a certain new product launch, and then they will be the one who will strategize or plan on how to create awareness in shoppers. Or perhaps I'll just bring you guys through what the entire value chain is like. So basically, these are the brand, or you can consider as a supplier of a certain products. They are the manufacturers. For example, the clients that Shopper 360 has in their portfolios are Nestle, Colgate, F&N, Fonterra, Samsung. So these are the few renowned brands under Shopper 360. They will sell their products through retail partners, or you can consider them as distributors, be it wholesaler or retail. So some of the names that you might be familiar with would be like Giant, Cold Storage, and these are some other retail chain that's popular under Malaysia side. For example, Mydin, Aeon, 99 Speedmart. The brand may also sell it directly to consumer as well. So it depends on how they want to distribute. And of course, the wider the network, the more reach to the customers. Nonetheless, both brands as well as retail partners will engage marketing agents to promote brand awareness. They will these marketing agents will try to convert shopper to buyer. They'll try to build in loyalty, increase retention rate, as well as increase repeat purchase from this pool of consumers. And typically, these brand as well as retail partners, they will engage 4 different type of agencies to market to end consumers like you and me. So we have below the line advertising, for example, the promoters or the events, road shows that you will see where it's more customer front facing. Media agency will basically be the intermediary of or the agent that connects brand and retail partners. So retail partners, they'll provide the media for brands to advertise. For example, like what you have seen here, the aisle, the shelf space for brands to market their products on. So Shopper 360 comes in between where they'll connect retail partners and brands. Creative agency. So creative agency is the part where they provide value-added services where they can charge a premium to it, because each idea they sell would have higher margins. And last but not least, digital agency. So digital agency, as you know, that now we have our eyes are more glued to the phones. These digital agencies will be the one that converts the traditional advertising medium into what you can see on your screen. So basically, the traditional medium will be your newspaper, radio, TV, pamphlet, and so on. Next, probably I'll just briefly bring you guys through what are the typical marketing strategy when they launch a new product or they launch a new retail channel. So, of course, these are the planning stage where they will discuss on how do they position a certain brand and how are they going to market. Next, they will get in touch in the media they wish to sell it through. Then they will engage consumers via activation, such as roadshow events. They will have promoters and sampling events. Last but not least, they will also have to ensure that whenever consumers want to buy their products, the product must be on the shelf, which would be under this merchandising and field work. So these are the group of companies under Shopper 360 that specializes in each of these marketing strategies or segments. So it's being categorized in 3 different segments, namely in-store advertising and digital marketing, the sampling activities and events management, and last but not least, the field force management. So these are just some of the competitive strength that we believe that Shopper 360 have against its peers or competitors. So it provides a full suite of marketing services. So instead of the brands have to go through 4 different types of agency, they just have to engage Shopper 360. It has 30 years of experience in-store advertising industry, particularly in Malaysia. And if you know that retail network is actually very crucial in this industry, because as they do not require a lot of capex to set up a business, but the network itself is very, very valuable. And hence, you also have to look into whether they have a very strong retail partners where they can provide sufficient or enough coverage for the brands to market the products. And you have to look into whether they have a very high retention rates of customers. So these are the contribution by each of the business segments. As you can see that field force being the most revenue generative business as compared to the in-store as well as the sampling activities. Nonetheless, if you look at the profit before tax level, field force actually contributes the second largest on this level. This is mainly because field force doesn't really require a lot of value-added services. They mainly just have to make sure that the product is on the shelf, inventory is sufficient. So it doesn't demand a high premium or a high margin to the contract. So basically, in-store advertising as well as sampling activities are the one that provides a higher value by providing ideas and innovation to the brands as well as retail partners. So this way they can actually charge a higher premium. Okay, so we have come to this investment thesis. So just to summarize, why we are so upbeat in this counter. So it's being segregated into 2 main different parts. Firstly, new contracts coming from their existing market, Malaysia side, as well as the new markets from Myanmar as well as Singapore. We also believe that this the current valuation is actually attractive, where it's currently trading at 5.8 times trailing PE as compared to the peers at about 13 times. So number 1 of what we have mentioned just now, new contracts coming in Malaysia side. So what have they done? Basically, They have secured the media concession rights for Shell, as well as for My News. They have also been awarded the media reseller rights for Spotify in Malaysia as well. So basically, this has actually ramped up the network coverage by at least 50%. And they have also added the digital media to their advertising channels portfolio. We believe that all this will actually provide a very healthy pipeline for them to cross-sell it to their existing range, to their existing clients. They can also cross-sell their existing 4 different types of businesses or services to their clients. For example, Nestle actually engaged most of its business services. So instead of, like I mentioned just now, instead of going to 4 different types of agencies, they can just engage Shopper 360, one agency by itself. It can also see a higher demand for marketing services as their clients' business continue to expand. As you know, that 99 Speed Mart is a very renowned retail chain in Malaysia. Last year, they have actually hit the milestone of 1,000 outlets, and they plan to grow or double that amount in the next 3 to 5 years. So you can imagine that the contract size from 99 Speed Mart would increase. They will also continue to acquire new customers from notwithstanding from the advertising channels, but as well as from the brands. They're also going into new services, especially in digitizing their marketing services, which I will not touch much in this presentation, as we continue to focus on the near-term catalysts. So as that's for the existing business in Malaysia. Into the new markets, mainly in Myanmar and Singapore. So for Myanmar side, how are they going to penetrate the market? So they have this 60-40 JV with Patama Group. So Patama Group actually is the largest and fastest growing distribution companies in Myanmar. If you look into their companies, they mainly cover the modern trade side as compared to currently what we are seeing in Myanmar is more of the wet market side. But as you know that urbanization continues in Myanmar, we'll see more or higher take-up rate in modern trade. And hence, this should provide a higher demand for marketing services in modern trade. So what has Shopper 360 done for the Myanmar side? So not just setting up a JV, they have actually been awarded an in-store advertising concession rights for 144 City Mart supermarkets in Myanmar. Sorry. So City Mart supermarkets is actually the largest modern retail group in Myanmar. It's actually a subsidiary of Patama Group. As for Singapore side, they are starting small at the moment, but they have just recently secured a creative agency contract with Burger King Singapore. So we believe that the contract coming from these 2 markets will not end here. And these businesses should start to contribute in the new financial year. Please note that their financial year ends in May, so they have just recently concluded their FY18. So having said that the new contracts coming from a new retail network, coming from new customers, we believe that the favorable macro backdrop should support the higher demand as well. So I've just mentioned the urbanization, especially in Myanmar side. we'll be seeing an increasing need for shopper insights as well, where we believe that shoppers now will compare across brands before they purchase something. And we believe that with intensifying competition coming from brands, coming from supermarkets or hypermarkets, this should actually propel higher demand for marketing services. So with that, we have actually factored in all these catalysts into our assumptions. So our revenue actually takes into account of the newly acquired contract for Shell, MyNews, Spotify, as well as take into consideration of the new markets, Myanmar and Singapore. So we believe that by end of this year, we should see earnings jump by at least 40%. So do note that management share the contracts for these few huge businesses actually will contribute to probably 10% of the recent top line each. So hence we actually factored in about 40% jump in their bottom line. And in particular, in the in-store side, so all these are actually coming in on the dark blue line, the in-store advertising and digital marketing side. Of course, as for the margin side, we have also taken into account of higher headcount in the new markets, and of course, competitive pricing in these markets as well. Nonetheless, we'll be seeing some ramp up in margins because of the higher margin activities driven by in-store advertising. So with that, we believe that the core earnings should grow by about 40% compared to FY18 in FY19. And that will actually gives you a sustainable, strong 20-ish adjusted ROEs. So that brings us to the valuation part. As we do not have any listed peers in Singapore and Malaysia, so we take reference from the big four in the advertising industry. So they actually return a market cap weighted average of 12 times forward PE, and we took a heavy 40% discount due to liquidity risk and smaller operating scale of Shopper 360. So we took a 7 times PE instead, and this actually gives us a target price of 33 cents. And do note that Shopper 360 has very little debt. It's flush with cash of 13.1 million ringgit. This should be sufficient for them to expand further into Myanmar as well as Singapore side. They do not have a dividend policy, but they pledge to pay out at least 20% of their earnings. FY17, they pay out 0.3 Singapore cents. This is actually 20% of their unadjusted or reported earnings. If do take into account, do take note that in FY17 they incurred IPO expenses as well. So with that in mind, we believe that FY18 dividend should at least double at about 0.6 Singapore cents. Last but not least, just to bring you guys through some of the risks that you have to take into account. Firstly, of course, competition. As I mentioned just now, it has a very low barrier to of entry because it requires very minimal investment capex. nonetheless, the valuable part is actually the retail network. Secondly, also you have to look into whether they will be able to diversify their customer concentration risk. Nestle, Samsung, Huawei are some of Shopper 360's major customers. Each of them contribute to more than 10% of the group's revenue. Last but not least, of course, the unfavorable FX movement of Singapore dollar against ringgit. So with that, I would like to recap that we have a trading buy call for Shopper 360 with target price of 33 cents. So with that, I would like to pass it to our colleague from Phillip Futures who talk about the Trump and Kim summit.
Okay, thank you, Linsin. All right, so this is Samuel from Phillip Futures. I'll be presenting on the Trump-Kim summit and the impact on currencies. All right, so just to note that last week itself, the Trump-Kim summit actually occurred, and during the Trump-Kim summit itself, we actually observed quite a few fluctuations in currencies. So you can see that up to the run-up before the summit itself, we can see that the dollar index actually rose. This was highly attributed due to the fact that people were confident that it was going to go on well. So you can see that the dollar started rising and the strength maintained. All right, it was until the afternoon, you can see that there was a slight spike during their lunch period, whereby after they finished their lunch and President Trump and Chairman Kim actually stated that they were going to sign a particular document, and you can see strength rose from there as well. However, it subsequently decreased after the document actually proved to be relatively general and there was no particular details in it. But even though we can see quite a number of movements in the Trump-Kim summit itself, the main gist of it is that it didn't actually move the dollar. The dollar was actually more impacted last week by the Fed itself. So you can see that the Fed meetings actually moved the dollar quite a bit. During the FOMC announcement itself, the dollar actually rose about 0.5% in 40 minutes. This was mainly because of the fact that during the highlights from the Fed meeting itself, the Fed actually removed the words, the federal fund rate is likely to remain for some time below the levels and are expected to prevail in the longer run from its statement, meaning to say that it's most likely more hawkish and is going to raise rates further going forward. And we also can see that during the press conference itself, the chairman, Powell, actually stated that the economy was doing well and the overall growth for the US remains favorable. And he also downplayed the current trade tensions. This actually caused the dollar to even strengthen even more. Of which there are also more Fed members who are of the view that there are 4 rate hikes this year based on the Fed dot plot. And if we can look at the chart obtained from Bloomberg, we can see that actually right now markets are also feeling that there's going to be 4 rate hikes, and recently market felt that 4 rate hikes is going to happen as compared to 3 rate hikes. So if 4 rate hikes really were to happen this year, we can see more strength in the dollar itself. So if we look based on the dollar index, we can see that right now it has shown signs of bottoming. The dollar index actually had a triple bottom pattern earlier in the year and showed that it has bottomed and started going up. Right now, if we look at it, we can see that it's also above the 20, 40, 100, and 200 moving averages, showing its strength. And if we look back at history, we can see that the triple bottom actually formed during the 50% Fibonacci retracement, and it actually shows more positive signs for it to strengthen. We can also see that over the week, last week itself, 2 other central banks actually released their statements, namely the ECB, the Europe side, as well as the BOJ. So for the Europe side, what happens is that even though it states that it's going to sort of like stop bond purchase by the end of the year, what happens is that they actually stated that they will most likely only raise rates after next year, mid next year itself. So actually this gives further strength to the US dollar. And we can see that actually the Bank of Japan remain their rates unchanged, and it's going to carry on the stimulus for a prolonged period. So if we look at this, we look at a technical analysis point of view, and we look at the US yen pair, we can see that right now the US dollar is also showing much more strength, and then it has rose upwards. We can also see that if we look at a closer basis, you can see that crossover has formed. It has bounced off the 38.2% Fibonacci levels, and you most likely will find resistance at the 50% mark. And if you compare to our local currency, I'm sure a lot of people are interested in the US Sing dollar pair. What happens is that ever since our MAS changed the monetary policy in April itself, what happens is that the US dollar has broken away from the downwards channel. So you can see that it has broken higher, and it has constantly shown strength. This is because of the fact that the US dollar since then has begun a faster growth trajectory as compared to the Sing dollar, who has already priced in most of the gains, and of which we can see that most likely the US dollar is prone to strengthening and may strengthen further against the Sing dollar. With that, I'll pass it back to Lin Sin. Thank you.
Thank you, Samuel. So we'll now open the floor to questions. So okay. There's a question on whether the meaning of trading buy versus accumulate or buy calls. So for trading buys, these are just our short-term trading ideas, meaning that we might not be continuing coverage or provide update reports on this counter whenever there's results. And trading buys or trading calls are actually valid for 6 months. Hi, there's another question that if the business of Shopper 360 is a low capex business, why is the company not distributing the cash as dividends? Yes, you're right. Nonetheless, currently after the IPO expenses, right, they are currently using reserving the cash to see if there's any opportunities that come by where they can do M&A deals. So, for example, last year, they have actually acquired this or invest into these companies called Boost Orders. So these Boost Orders is the digital format where they will be able to enhance their field force management. And there's another questions on the ratios for PE and ROE for Shopper 360. So this is the table for you to compare against the big fours.
Hi, sorry, this is Samuel from Phillip Futures. This is to answer a question that wouldn't the increase of Fed interest rate worsen the deficit problem of the US and hence result in the US dollar to weaken instead of strengthening in the mid and longer term? All right, to answer this question, what will happen is that the deficit problem to note right now is that the Fed is constantly buying back their bonds every month, and they have stated that they may likely sort of like decrease the rate of buying back. So if that happens, the deficit issue will not actually worsen, but it's most likely going to stabilize because they have another method to sort of like prevent the situation from worsening. And you must note that mainly the currency is also reflective of the strong economy in the long run, and the US economy have been very strong thus far, as stated by citing just now. So we can see that if the US economy, the unemployment rate, the manufacturing numbers constantly improve, it's actually going to give more investor confidence in the dollar, and it's going to drive the dollar strength even higher. And if we look at it, we see at the bond yields and everything like that, it has been relatively strong at the moment, and it's sort of like giving interest back to the market interest back to invest in the dollar or actually dollar denominated products, and this will in turn give strength to the dollar as well. So if we look in the long run, the Fed raising rates is not only we are looking at the deficit issue or whatever, but we have to look at the economic returns it's going to give the overall economy in the long run. We can see that last week on Friday itself, the dollar strength weakened slightly, but that is because of the fact that we see the trade situation between US and China worsening. So it actually limited the upside a little bit. But if we look at the overall run last week itself, the dollar strength actually grew by quite a bit. And since March itself, you can see that markets has been relatively receptive over the gain strength in the dollar due to the better US economy as compared to its peers and everything like that. So this going forward is also going to be another strength catalyst for the dollar itself. Hi, sorry, Simon from Phillip Futures again. I see a question is, where do we see the US dollar and Sing dollar levels towards the end of the year? So just hold on while I share my screen. So if, like example, if we look at the let's look at the US dollar Sing dollar, for example, we see actually approaching the 1.38 levels closer to the end of the year. This is going back to the 2017, around the early 2017 regions, and these would actually mean that the US economy has successfully recovered. But however, going forward after that, towards the last quarter, I would say that then it will be more dependent on Fed's overall incentive towards next year's raising of rates, and the dollar will sort of like take accordingly. Because like what Saiting has said earlier, the Fed has actually given sort of like forward notice that it's most likely going to change its press conference frequency from around once every quarter to every month from next year onwards. So because of this, it's likely going to indicate that they may have a more hawkish stance going forward. And if they raise rates higher, more rate hikes next year itself is going to give further strength to the dollar.
Hi everyone, Jeremy speaking here. There's a question asking what are the main reasons causing the SDR to drop recently, now it's below the 200-day moving average. So at least on the technical front, we have been seeing some weakness coming to the market since somewhere end of April. So I think we mentioned this before, at least from a longer term perspective, we are seeing that correction happen somewhere end April, and this sell-off kind of a prolonged to where we are right now. Again, just to illustrate the most recent ongoing movement for the STI, we actually saw some weakness somewhere around this period, and mainly caused by this January high of 3,611 points. So January was when we got a pretty good month, but after hitting that high of 3,611 points, you can see the April rally also kind of took price above that 3,611 point, but ultimately the weekend closing was pretty weak. So instead of closing above that 3,611 January high, you can see the best actually were pretty strong. And on that week itself, we can see the best actually closed price near the low. And all in on a weekly perspective, is actually forming a bearish engulfing bar, which is a bearish reversal candlestick pattern. So that by itself was the first signal that we are seeing some weakness in the market. And ultimately, on a bigger picture time frame, what we saw was a bearish divergence forming from the relative strength index. So the bottom panel over here is the relative strength index, which basically measures momentum. But what we observed back then during this period was a bearish divergence that was forming. And mainly bearish divergence, meaning you can see January high point was at 3,611 point. And during that period, the RSI was somewhere around 74. So this was the high that happened in January. And concurrently moving forward to end April, you can see the SDI actually broke a new higher high point, somewhere around 3,641 points. But on the flip side, you see the RSI was actually forming a lower high point at around 58. So all in is with that bearish reversal candlestick pattern on the end week ended this particular period, end April, as well as the bearish divergence that kind of ushered in this sell-off that we are currently seeing. And you can see that was the starting point of the current sell-off. And more importantly, right now, we are seeing the weakness kind of extending itself, especially today. So moving to the daily time frame, we are seeing the further sell-off happening today with this big gap down. And I think more importantly is how this structure, this main support level that we were kind of emphasizing pretty much for the past 2 to 3 months, this 3,341 support area. in order for this uptrend to hold up itself. So ultimately, we kind of broke below this level today. So the main reason why this level is important is because you can see this was a reference point back in somewhere around in August of 2017. It first formed a resistance, and since then, after breaking through it, it has been support during this period in November of 2017, and then February of this year, as well as April of this year. So all in, you can see the support was holding up pretty nicely, at least since the start of this year. But ultimately, I think today we are seeing further weakness coming in and kind of extending this sell-off since end of April. So I think a lot of sell stops are being placed just below this level, and ultimately, obviously, with this gap down, I think there are a lot of traders that are being kind of stopped out, and we are right now seeing the over-exaggerated move from this particular sell stop. And in terms of probably seeing some rebound for this STI, as you can see, the RSI is also right now way oversold. So with this recent selling since end of April, the RSI is right now at 24. So signaling an imminent correction, probably rebound back higher. But in terms of support level wise, to kind of a catch for a possible rebound, the next key support level probably will be somewhere around here, which is around 3,200 points. So all in, probably this sell-off might continue for a few more days before we tag this key support level at 3,200 points before further buying comes in. And even on the daily time frame, the structure of the immediate trend has definitely turned down, with the 20-day moving average crossing below the 60-day moving average, which is the red line below the blue line. So all in, the STI right now looks pretty bearish, and probably gonna see some extended selling within the STI before some bullish price action appear. So for the STI outlook wise, with this support level being broken to the downside today, it'll be interesting to see how kind of price develops moving forward. But definitely right now, the sentiment is pretty bearish for the STI perspective as we break below this 3341 support area.